Don't wait for tomorrow. Live for today. Keep chasing the sunshine and go out and play.
Good evening, everyone, and welcome to another deal reveal. I am coming back to you live from Quebec, Canada. Last week, I was in Vegas. Next week, I'll be in Costa Rica, and so you are catching JK on the fly here, as we love so much. And today, no exception, we are bringing to you another deal. This time in an asset class we've only done a couple of deal reveals on, and that is a mobile home park. So let's see how this plays out. So I want to, a second objective of our deal reveal this week is I want to show you how far you can get into an analysis without even having the address sometimes, okay? You really don't need that much information to take a quick look at a deal and get most of the information, not all of it, of course. That's why there's a real due diligence period to the real estate acquisition process. But the deal reveal is here to show you lightning fast so you can get a good sense of what's happening, and that's what I want to show you today. So a couple of announcements before we jump right in. If you missed our giveaway, well, shucks, you're gonna have to wait for the next one. But our giveaway took place on November 22nd, where we gave away 2 nights, 3 days in either the magical Muggles Mansion or the Pixar Perfect Infinity and Beyond vacation rental property in Florida. Our grand winner, Jose, won. So very, very exciting. Congratulations to everyone who participated, who won all the partial prizes along the way. And if you didn't win the grand prize this time, well, be sure to check it out next time we roll out another contest. And so for those who completely missed it, you can go to n40.club/giveaway and you'll see what that was all about. And you can still pick up those mini prizes that are available along the way. So that is that. I want to remind you as well that we have been uploading a ton of content onto our YouTube channel, JK's Real Estate Partners. Every single deal reveal is there, and we're going to be starting to publish more of JK behind the scenes, the life, the life of Pi, right? The life of K and the life of J. What did Janie and Kyle do today? Well, Janie and Kyle today was actually taking over the management of a domain, and we were getting it ready, and we had the whole team there. We were about 5-6 people, and we were just staging it, getting it ready. And honestly, by tomorrow, we'll have 4 new short-term rental locations under management. And this is all involved in a bigger strategy where we're actually going to buy this property in about 3 months. And there's a reason we're not buying it day one, but we are test driving, managing, and optimize it pre-purchase. That might probably will be a deal reveal for another day. But this is what we want to show you. YouTube is going to be the platform to do it, where we kind of show you what does a typical day for Kyle look like? What does a typical day for Janie look like? Jane doesn't have very many typical days, but this is all part of the life of a real estate investor, potentially. It's the way we chose to build our businesses, and maybe that resonates with you, maybe it doesn't, but heck, maybe you're curious and it'd be a fun JKTV for you. So enough said about that. Let's get into some excitement. We are going to take a look, as I said, at a mobile home park, and we're going to take a look at it lightning fast and see if the numbers are really 4 to 10 times better than what you might find for investment real estate in Canada. So I want to thank Daryl for submitting this deal to us today. This is an 11-lot mobile home park near Columbus, Ohio, for $400,000. Okay, so first of all, this is a park. This is not a mobile home for $400,000 like you might find in California or in some areas in Canada. It's not the home that's 400,000. It is the park. Okay, it's the whole thing. So 11 lot mobile home park near Columbus, Ohio, $400,000. I won't even give you an address because honestly, I don't even have the address. Okay, I got an email from Daryl that looked a lot like this. Okay, great location. It's located about 15 minutes just outside the Columbus metropolitan area. It is fully occupied, 11 lots fully occupied, and lot rents at $375 a month. So the tenants pay lot rent. And there's a duplex also on the land that's renting for $11.50 currently. These are all actual right now numbers. It has city sewer, so the septic, the poop goes to the city infrastructure, but the water is private. The water comes from well, it's private well, but because it's so close to the metro area and the city, it's not completely in the boonies, not completely in the country, and so city water is available if the owner wanted to call up the city and say, hey, we'd like to connect it to city water. It is a possibility to do that. It'll obviously add in some extra costs to connect it to the city infrastructure, but it also reduces some risk because it's not private infrastructure anymore. So if things break, it's the city's responsibility for the most part. So sewer's already in place, but currently it's well water. Other advantages of having private water like this is you can sub-meter it. You can back bill if you have counters on the water usage. Often this is not something that's just in parks. Most park owners don't do that, but this is an area for optimization. If you do meter the water individually per lot, you'd be able to then basically act like the city and back bill your water usage, even if it's private utilities. And so this is the last bit of the message I had here. Gross income $63,000 a year and estimated NOI of 41,145. Right? This is it. Let's see what we can do with these numbers here. I don't even have an address, so I won't be able to check out the area. I won't be able to go on rental meter to see what market rents are. And by the way, a mobile home park and lot rent is not exactly the data that's going to populate from rental meter anyways. So we're really going to have to go with what's there currently. And before we buy the property, it'd be important to go see two other pieces of data. One, what are other parks nearby charging for lot rent and home rent? Different things. Lot rent is if the tenant owns the home, the house, the trailer, the mobile home, and you would own the land. Since you own the land, they're renting the land from you, not the actual trailer, house, home, or mobile home. Okay. So what's important here is, okay, so that was one thing, is basically what are neighboring parks charging for rent, for lot rent and home rent? And two, what does the apartment, what do apartments nearby rent for as well? Because there's no way you're going to be able to get more for your typical mobile home compared to an apartment or a house. Okay, so these are good tiers to look at to see, okay, lot rent is 375, neighboring parks are all at 450 at a minimum. Okay, apartments, a 2 and 3 bedroom apartment nearby is 750, and a house is 1,000. So based on that data that going up to 450 basically is overnight, and the mobile home a mobile home park would be a very cheap option, even much cheaper than the apartment space in this area. And so that gives even more room to push those rents up, because if you can't afford a house, you live in an apartment. If you can't live in an apartment, well, typically you're in a mobile home. And so after that, it's the street or at a relative or living with other people in one of those assets. So it gives you an idea of how much you can push up the rents. And then you can obviously talk to your property manager to see what they have to say about the rent increase as well. So trying to give as much information here, but we have here that the park is fully occupied and lot rent is $375. I am going to assume, just based on the information that was given here, that all 11 homes are not park owned. They're all tenant owned. And so let's just pull out a calculator and see if the numbers add up based on that assumption. So if I have 375 and I have 11 homes in the park and there's 12 months a year, that's 49,500 coming from the 11 homes just with the lot rent. And then there's that extra duplex, so 49.5, and then we have an extra duplex that's 1150, 12 months a year. And then so if I add the 13,800 from the duplex with the 49,500, I get my 63,300, which is what they said the gross income is. So now I've confirmed 100% that all of the homes are tenant owned. Okay, and this is really, really important in the mobile home park space, because if you don't own the homes, you just own the dirt. And that makes it a very lean investment. There's very little management and maintenance, well, especially maintenance or management of any maintenance to do, because really all you have to take care of is maybe the road, the grass and the common areas, but everything else, if the toilet or plugs up, or if there's a roof that needs repairs, you don't own it. You don't have that repair. And so what's that going to do? It's going to decrease your expense ratio even more than what an apartment building expense ratio might be. So if you've been on these deal reveals before, you've often seen me in the residential space use the 50% rule. If the income is 63,000 a year, let's say this was a single family home that brought in 63,000 a year, the 50% rule would say slash it in two, multiply it by 50%, and about 31,500, 32,000 a year would be net. That's for single family homes. In the apartment space, depends who pays for utilities. If the owner pays for all utilities, it's the 50% rule. But if the tenant pay for all utilities, we use basically the 60% rule, right? A 40% expense ratio or a 60% rule. Basically, if this was an apartment building, I'd take the gross income, and if tenants paid for all utilities, I would multiply by 0.6, which represents a 40% expense ratio. And so I would expect the net income from this property, if it were an apartment building, to be about $38,000. Okay. But this is not an apartment building. This is a mobile home park that is fully occupied, 100% tenant owned homes. Okay. And you have private utilities, at least partially, because of the well water. You are in one of the most leanest expense category asset classes. This is the only time where you can basically go up to sometimes a 30% expense ratio, or we can use a 70% rule off the gross income. So again, if our gross income is 63,300, we are, I'll say it again because it's important, these are very specific criteria, 100% occupied, 100% tenant owned, and utilities are private. In these situations, you could have an expense ratio as little as 30%, okay? And so your net income could be $44,000 on this $63,000 gross property. Okay, they're saying that it's estimated at 41,000, and we're saying it could be optimized all the way up to 44,000 approximately. If ever you run your quick trick, 50% rule, 60% rule, 70% rule, depending on the asset class and the category you're in, if you run the numbers and they say it's a number and you come up with another, always take the more conservative of the two to run your next step in the numbers. So I'm saying it could be optimized up to 44,000, but they're saying 41, use the 41, okay, for your numbers. So 41,000 is what this property is estimated to make in a year if there were no mortgage. So now we can run a cap rate. We can see that if we bought this property for $400,000, what would the cap rate be? We have a mobile home park, fully occupied, turnkey, lien, all tenant owned, and they are asking a 10.3. Their asking price is a 10.3 cap. That's where we're at right now. With mobile home parks, okay, it is a commercial lending asset, right? It's like an apartment building. And so the value of this park is determined by the net income it generates. Currently, that net income is right around 41,000. Okay. We would have to do some due diligence on this area to see what is the average cap rate for this type of asset class. And with the interest rates rising, it will decompress the cap rates a little bit, but for a good long while, we were in the 8-9 cap range as an average for this type of asset class in general. I'm being very broad stroke here. I'm not an expert in the 15 minutes outside of the Columbus metro, but just in general, putting a mobile home park in a 9 cap area like this, turnkey, maybe it's even lower, which has more value for the income it generates. We would basically say that something that generates 41,000 a year net in a 9 cap market is worth $455,000. They're asking 400,000. It has not been negotiated one bit right at this point. All we know is that right now the asking price is 400,000. It's a 10.3 cap, and with a little bit of due diligence on this area to see what if market rents for these homes was $450 a month. You buy it and you increase rents by $75 a month, which sounds like a big increase, but I mean, they're only paying $375 a month in rent. And if market rent is $450, you're going to put it up to $450 as quickly as possible. Right? And look at the difference of our numbers. If this rental amount is actually under market by $75, take a look at what happens. If we have $450 per lot, there's 11 lots, 12 months a year, and then we add our duplex in there, so that's 59,400. Boom. We would have a gross income of 73,000 a year. Because this is such a lean property, we use the 30% expense ratio. We have 51,000 a year net from this asset. And in a 9 cap market, this property would be worth $569,000. Okay. What did we do to optimize? What did we do to just add $100,000 of value to this property? All we did was increase rents. Right? So if there's an opportunity to increase rents based on looking at this, right, there is a good, easy value add play happening here. Okay. So 2 golden rules of real estate. What are they? 1, buy at a discount. I just showed to you really quickly that this park is probably worth about $450,000 right now. They're asking for, and if you negotiate it to $350, you're buying with $100,000 of equity right there. And you can see that with a very small optimization of increasing rents, that same optimization could be by back billing, sub-metering the homes and back billing $50 a month of water. All right, maybe their water is free right now, and you can back bill that to them with a little bit of infrastructure that gets put in place. With a little bit of an optimization, you can add another $100,000 of equity. And so maybe you buy for $375, and in 3 months, it's worth $570. You can add $200,000 in net worth to your balance sheet in a matter of 3 months, buying at a 10 cap. And now that the property is generating $51,000 a year, and if you buy it for, say, $375, not a crazy negotiation, you've brought this property up to a 14 cap. Tell me, is this a deal or no deal from where you're sitting right now? Are we buying at a discount? Are we buying cash flow? Is the cap rate strong enough for you? Is this something you'd be interested in putting an offer on? Puria says it's a deal. All right, fantastic. And I talked a lot. I tried to give a lot of information, but I've been going at it for like 12, 15 minutes right now, just giving you information. But look at the information we started with here, okay? Hardly anything. And I know that this property is somewhere between basically a 10 and can be optimized to about a 14 cap. I know we're buying at a slight discount right now at asking with a little bit of optimization, maybe some seller financing there. You got a deal. Sterling thinks it's a deal too. Fantastic, Sterling. Sending lots of love your way as well. And so that is what I wanted to say for you today. This is a real deal, okay? So if you're interested in this one in particular, I can facilitate an introduction to the gatekeeper for you. This came in my inbox and I said, boom, I'm gonna take a look at it. They asked for an NDA, so I don't have the address and I'm not looking to, to circumvent anybody. But if someone's interested in this, send an email. And where do you send an email? To info@nowfortomorrow.club. It's the same email. If you wanted me to reveal your deal or showcase a property that you're interested in, it's the same email. You know the drill. All right. So if this is a deal or no deal, I think this definitely has potential. You're near a big city, and so getting management will not be as difficult as if you're completely in the boonies. It's extremely lean of an investment. I've got a feeling that lot rents are under market. I didn't do any due diligence, but I've got a feeling. And so I would go in there and say, hey, we like the asset. Is there, build a relationship with that seller and ultimately see if they'd be open to something under 400,000. Start there. Get them off the 4 into the 300,000s, and then you have a whole 300,000 range to negotiate on. So if this is interesting to you or anything else I've mentioned here, you may be interested in the investor portfolio bundle that we put together and we started to showcase. This includes the master negotiations program that we've built at JK. How do you negotiate? How do you include seller financing in your deals? And how do you posture yourself so it's their idea bringing this to the table? Multifamily manifestation really is going to dive deeper in apartment buildings, mobile home parks, self-storage facilities, hotels, motels, anything with commercial lending, we include in the multifamily manifestation, as well as our Blueprint Expanded, which is going on right now for the next 4 weeks. We're going there for those who've attended the Blueprint. Well, the Blueprint Expanded is your next step. The Co-Wholesale Bootcamp, the Millionaire Mindset Miracle, these are all included in the investor portfolio bundle. So if you're interested in that, you can go to Facebook and reach out to the JK team. You can email us at info@nowfortomorrow.club or reach out to any success strategist that you've come across on your journey thus far with JK. So that is what I have to say, ladies and gentlemen. Have yourself a most wonderful evening. And if you're just starting out, you haven't attended even our foundational training of the Blueprint, take a look at this. And this is your next step for U.S. real estate. Have a great evening, everyone.
For me, it's it's a second family, right? It's been an epic journey. I could speak for hours, but yeah, basically, if you're looking for cash flow and you feel, that there's one thing that can't be replaced is taking action. It could be a small step, big step, doesn't matter really. Just take action towards what you really want. And if you want some cash flow, that's really a good way to go. So yeah, if there's any question, and you see my name, that's my real name. If you want to talk with me privately, hit me on Facebook. Whatever, I could answer any question down the road.
So you're the guy still that has a mobile home park under contract?
Yes, I do have a mobile home park under contract. That's I don't know if you all listen to when Mark and Sarosh were speaking, but that has a freedom number, and this mobile home park pretty matched my freedom number. So and it's larger deal. It takes more time. Depends on what you want, but it takes more time. But the rewards are equally bigger. So pick your strategy. Could be both. It could be whatever you want. But yes, I do have a home park under contract. I've been working at it for a while, but it's a little cash flow machine. The numbers are great. I don't know if you spoke about it, but we're talking about like over 20 cap here. I don't know if you, Kyle, you covered the cap rate, but that's and that's real. Like those little diamonds exist out there, but it takes some time. Do.
Yeah, absolutely. They're created.
Yeah, they're created. Exactly.
Yeah,
exactly.
But you've got about 24 other properties under contract right now that we didn't even talk about. But it's pretty awesome.
Yeah, total there's close to 45 units right now under contract in the US. So it's took some time to start a machine, but when it started, I mean, it's even harder to stop, I guess.
Yeah, that's it.
Don't wait for tomorrow.